Welcome to our new episode of Speak Revenue. Remember, revenue is not a goal, it's a result. But a result of what? In this show, we turn our eyes from the output towards the input. We speak with sales and revenue leaders and entrepreneurs and investors about their journey. So join us on our quest to uncover and learn the root causes of success. Let's figure out what works for them and what didn't. Today with my guest, Anthony Franklin. Welcome to the show.
Great to be here. Thanks.
Thanks for joining. Anthony, real quick for our audience, who are you? What do you do? Who do you do it for? And what makes you folks so successful?
Thank you. My name is Anthony Franklin. I am running a search fund, and basically it's kind of a form of private equity where we go out and we talk to thousands of business owners that are considering an exit from their business. And the goal is to find, acquire, and operate that business for the long term. Obviously, there's a lot of stages in there, but that's really what it is. So I lead a small team and talk to business owners about what's their priorities and their exits, and hopefully find a great business that we can own over the long term.
I'm so happy that you're on our show today because I keep explaining to entrepreneurs who are super excited. I got an email from XYZ big investor. I'm on their radar right now. I don't want to crush your party, but VCs and investors have to maintain a pipeline as well. The bigger the pipeline for an investor, they have learned from us salespeople as well. The bigger the pipeline, the higher the chances that they will find a good investment. Now, I know that you have a background as a salesperson turned private equity. Tell me more about this. What is your personal story? How do you get from being in sales to being on the side of an private equity investor side? And should more salespeople become entrepreneurs?
Quick answer is yes. So my background is I've been in sales revenue for, I don't know, maybe 15 years. And I have this unique career where I started off carrying a bag. I managed a team. Then I was a pastor of a church for about 3 years. And then went back into the for-profit world. Funny story there. And then I've been in venture-backed startups probably for the last 7 or 8 years, right? And last 3 or 4 have been VP of sales, head of revenue roles. And one of the things I found, and the reason I went into kind of this space, is that when you're in venture-backed startups, even though you've been responsible sometimes for winning tens of $1 million of ARR in the business, right? You actually get, if you're lucky, 0.5%, maybe 1% of equity. And it just didn't seem like what you're building, you're really getting rewarded. And that's not even real equity, that's options. And you know that whole story. So I came across search funds as a way to take these skills that I've developed as a sales leader and managing go-to-market teams and funnel that into something that, hopefully will pay off a lot more in the future, not just in options, but also being rewarded for what I built over time.
So maybe for our audience, real quick, what is it that you guys are doing?
Yeah, so what we're doing is we are reaching out to business owners, entrepreneurs that have built their companies and small companies, but they're looking for an exit. And that could be a lot of reasons. They want to retire, health issues, they're running 2 businesses, they feel like they've capped out, maybe they don't have the sales or go-to-market expertise, they're more of an engineering type, whatever it is, and having that conversation about what's the next sort of era of that business look like, right? They built something incredible. So what we're doing is our small team is reaching out to thousands of businesses looking for the right business for us to invest our time, our money, and so that's what we're doing at scale. And it's private equity is in some ways, when we're talking about deals and how to get more businesses into your funnel, it's very much a sales game. And I think salespeople have that skill set, and that's what I'm bringing to the table.
It's probably not a sales game, it's a buyer game.
Sure.
You're buying companies. But the logic is
Well, it is.
just
I'll
this.
say this. It's a sales game in the sense that they have to decide to sell me their company. Yes, I'm
Yeah,
buying, but there's a bit of a
yeah.
sales that I'm the best buyer for your business. So it is kind of that give and take of sales and buying it.
Whoever from our listeners wants to sell their company, what are the entry criterias?
Yeah, so entry criteria for our search, and then there's others out there, but we're looking for B2B SaaS. We're looking for companies that are between 3 and 15 million in ARR. We're looking for profitable companies. They don't have to be massively profitable, but they need to have some profit. We would love $1 million in EBITDA, so their profit. And then we're looking at some interesting industries. We're looking at things, fraud detection software. We're looking at legal software. So they call it e-discovery software,
Mhm.
and then speech and voice recognition software, which is the last full-time role I had. I was just in a head of revenue role, so know a lot about that space as well.
What about geographies? US, America
National,
only,
yeah.
or worldwide?
Yeah, no, we're doing national US. We are, kind of a big decision because my wife and I and our kids are planning on moving to where this business is located.
Mhm.
So we're serious about this. It's not a small deal for us, but we're really invested in building this business and taking it to the next era.
Interesting. Your target group, if we want to call this,
Sure.
are you calling this ideal customer profile?
Yeah, I would say that ideal customer
Yeah.
profile. We don't really use those sorts of terms, but it's essentially the same thing, right? Target acquisition, target owner. But yeah, I
Mhm.
would say it's essentially the same thing.
It's the same thing, but different vocabulary. So, what's your definition of your target company,
Yeah.
target group?
Well, the definition, so I think there's maybe 4 types of companies that I think are really attractive for a search fund, and particularly ours, right? I think number one is businesses that have a niche addressable market. So maybe they wouldn't have the same kind of love from venture capital or private equity. We're talking about SaaS for credit unions, right? Maybe a smaller group, a specific tool
Mhm.
set. Another one's software plus services. So maybe half of their revenue actually comes from consulting, half of it comes from recurring revenue software.
So they don't have to be on the traditional track to unicorn.
No, no.
They
In
have to
fact,
be
it's
on the
usually not.
track to healthy company.
Yeah, I mean, there's a combination in today's world, right? So most of the time, it's going to be a bootstrap business. Someone's built it themselves, and now they're looking to take some chips off the table. And they may stay on in the business. Maybe we keep them on, and they are the CTO, and they want to keep building, but we just have a controlling interest in the business going forward, and we work together to build this to something even greater, right?
What's the multiple? What's the range? Say I have a B2B SaaS making 5 million, 1.5 million EBITDA. What can I expect as a payout if I sell?
To us or to someone else? It depends on who you sell to, right? So if you're looking like for top dollar for your business and you don't really
Mhm.
care what happens after you leave, right?
Mhm.
Private equity and strategic acquirers probably are the best fit, right? If you want someone like yourself running the business and you want to pay a fair price, usually search funds, some private equity would be good options. So some of it's who you are selling to, right? Some of it
Mhm.
is how much EBITDA is in the business. Some of it's the type of business. So if we're talking about SaaS, usually that's a revenue multiple. We're looking at anywhere paying between 2 to 5x revenue multiple. Right now, public companies are trading around 6x revenue multiple SaaS businesses. These are not as big, these businesses. They're actually quite considerable risk at this stage. But still, I feel pretty good. That's where I've been the last 7 years. So that's a risk I'm willing to take on. And then there's other considerations. Is this a predictable revenue business where you have recurring revenue? That is a lot more attractive because you can take debt out against that business and you can predict what's going to happen in the future. I think the size of the business matters. So it's hard to point, but generally, we're seeing public companies trade at 6x and probably a smallish company at this range, some point below that.
How do you reach out to this target group? How do you filter for them? It's easy to get address lists. There's
Mhm.
Apollo, there is Zoom Info, and all the others. But what do you filter for?
Yeah, good question. So this is an iterative process, like I think all sales is. But for us, it's more about the industry itself. And then it's about the size of the business. So filtering from those places. And then I think a revenue range, and then building sort of a list there. And then sort of have an outreach campaign where we're getting in front of a lot of these business owners. So let me take a step back here. So there's 3 ways you can find a business, right? There's proprietary search. So that's like what most sales outbound would be thinking. Then you've got a brokered search where maybe they're going to a broker because they don't really know what they're doing, the business owner. So maybe we go to a broker that kind of shops this business around to see what folks are willing to pay for it. And that happens less often, more competitive. And then probably the third way is through your personal network, right? And there's advantages and disadvantages to them. But if we're talking about proprietary search, that's what we're talking about. We're talking about usually a 8 to 9 touch cadence of outreach. We're doing...
we're talking email.
Yeah, cold email. We're doing a few phone calls. We're doing a direct mailer as well, just to kind of skip the spam filter if we're hitting that. And then we're also doing some sort of vidyard and putting our face in front of owners.
Give us, we like to be in this show always very tactical, hands-on, in the trenches. How many emails are you sending per month?
Per month, we just got started. So, how many total emails a month? We're probably looking at
ballpark
800 to 1,000, let's say.
Okay, that's already a solid. If you can share, what's your opening and what's your reply rate?
Open rate, I'm not sure off the top of my head what the open rate is. I'd have to check. So we just started the search fund. So we're just starting the outreach. And so we're still on.
Let me ask in a simple way, how many meetings do you get out of this?
We get a good amount of meetings. So let's say on average, 8 to 10 meetings a week. That's through just proprietary search, right? And again, meetings is just defined as someone willing to engage on a real live conversation. There's further qualification criteria, just like any sales process. But 8 to 10
I was about to ask, you're setting out 800, you get 40 to 40 meetings a month out. That's, if I'm not mistaken, 2.5% to 5%.
Something like that. Yeah, that sounds about right.
Yeah. And then you take those meetings, and this is essentially a qualification call.
Yep.
Who's doing the qualification call? Is there something like an SDR, BDR, or is
this is a little different? Generally, business owners don't want to talk to SDRs or interns or any entry-level employee. They want to talk to the person and get a sense of who would be buying the business. That's pretty important. This is very personal to them and something they built for maybe the last 5 to 10 years at least. Yeah. So usually I'll run that myself and have qualification criteria that sort of I'm looking for, at least in that initial call. Rather than try to close on that first call, usually we'll have a second call just because we'll both have extra questions. And there's a bit of a comfort level that I think is different in this space, right? So if I'm buying a product, I am using my company's money in B2B, that is an easier decision than sell my life's work for the last 5 to 10 years or more to this person. So I find that, usually we need to have a second call, follow-up questions. They have questions for me, and that's totally fine. And then that gets us to the sort of LOI stage. And so we're making a offer to buy the business.
How long does it take between this first call and you making an offer? And what needs to happen in order for you to be even able to make an offer?
Yeah, that's great. That's a good question. So I think some of it's the criteria I discussed earlier on this. So if they're meeting some of that criteria, but there's other criteria as well. Some of this is hard to quantify, but let's say talking to a business owner that's not selling the business for really a valid reason, right? So if you have a younger business owner who is selling, it seems like at the prime of the business, it doesn't really compute and they can't really give you a reason why they're selling. That's a red flag, right? Why would you have this great business that you're willing to sell? So sometimes it's something like that. Sometimes it's also more of, is this someone that is going to be easy? Like the culture they built, is that something that I would want to inherit? So maybe employee retention is fairly poor, or the culture they built is a culture that doesn't really vibe with kind kind of what I would want to build and what I think. So sometimes you have to quantify it, but so let me take a step back. So you have that qualification call, then you have a second call where, you get all the questions out. Then you usually request financials. You sign an NDA, a non-disclosure agreement. Then they send you the financials and you do a bit of analysis, put it into an Excel sheet. And would the numbers work out potentially?
Mm-hmm.
Assuming everything they've told you is true, would the numbers work out to deliver a return to investors, to all of that, pay down debt? And then if that would work, then we'll make an offer. Mm-hmm. So part of it is the financials, but part of it's also the business they built. Is that something exciting? Is it what they advertise on their website? Mm-hmm. Sometimes you talk to a business that says it's recurring revenue and you find out it's a team in, a foreign country and it's not really automated, right? It's not really recurring revenue. It's actually some folks saying it's AI, but it's folks in the background actually manually doing it, right? And that's where you have to dig into some of these things.
At some point, you have to do all the due diligence and tech due diligence and finance due diligence. Does the founder usually stay on, or do they just cash in and cash out and are gone?
If you're part of the search community, this is a pretty divided issue, right? Like it really depends on the person, how good of a people manager the purchaser is, right? Have they actually even managed a team and can navigate some of those difficulties? And what the owner wants to do. Some owners want out. I'm going to the Caribbean after this and I don't want to touch this thing. I haven't taken a break for a long time. That's very different than maybe an owner that, let's say, is a Series A, stressed Series A startup that maybe has been building this and they're not going to raise a Series B. They maybe have venture partners, but they want to get out of the kind of venture game. It's maybe not a venture scale business. They're growing, but just not at that level. That person probably wants to stay on in some way. And we're open to that if they want to stay on and maybe hold, 10, 20% of the equity and continue helping us build this, right?
So you come in as a partner then?
Right. They come in as a partner. But generally speaking, most owners I find, they want to exit. And maybe they'll stay on as an advisor or a consultant.
Who's filling that chair? Where do you find people talented and skilled enough to take over from the founder who are not currently crazy busy doing something else?
Search funds, the way they work is the person raising the fund and buying the business is also running it. So in this case, I would be running the business, and that's part of the allure. There are some people that buy businesses and they don't want to own it. Well, they want to own it, but they want the cash flows, but they want someone else to run it. And then in those cases, there is always people out in the job market that would be chomping at the bit, I think, for this type of role and a way to create their own destiny. Some people prefer younger, hungrier, and this is all debatable, okay? But younger, hungrier, maybe an MBA grad that is looking to get into the role and has some investors, has some advisors that can guide them, mentors.
Let's talk real quick. We spoke before the show about salespeople becoming entrepreneurs and that we see this, but we both feel we are not seeing this often enough. I'm an entrepreneur turned salesperson, to be honest. You're a salesperson turned entrepreneur. We spoke about Sam Jacobs, the founder of Revenue Collective, now Pavilion. There is the GTM fund, a lot of salespeople and GTM people funding companies. Why do you think that there are not enough salespeople being entrepreneurs? What do you think is the reason?
So I think there's maybe three reasons, if I'm honest. I do think sales is it's really unique, right? There's actually no other job that you can really get where you can pinpoint exactly the metrics you need for success. Any product manager, any engineer, any other person other than the go-to-market team, they have a hard time. And I think that measuring of success and how easy it is, it actually is quite different when you're an entrepreneur. You can measure sales success, but how do you start measuring these other things? And I think there are measurements for sure, but I do think sales is I think you get used to the pinpoint accuracy, right? And being able to create your own destiny. And I think that's harder as an entrepreneur. I think there's more risk as an entrepreneur. Everybody's heard the stats of how many startups fail, right? And so you have this sure bet if I can go in and make $250,000 or more as an AE in many roles versus I might work out and live out my dreams and be an entrepreneur and CEO. I think that risk is hard for many salespeople to absorb. I think it's easier, though, for them to absorb it because 50% of their revenue is based on it's at risk anyway in the first place, right? But so I think that's part of it. I think the third reason, too, is I just don't think there's enough. If we're talking about entrepreneurship and how to deploy capital, I think what happens is we're individual contributors. We learn how to do a skill set. Then you're a first line manager. Your role is to manage people. But then above that, second line, third line managers really need to learn how to deploy capital. And that's not a skill set that we are very good at. And I say this is the tech world, are very good at teaching those managers. How do you deploy capital in the right way that's going to return? You're not just doing what all your competitors are doing or what you've done in a previous company, but you have a really thought out process of how you deploy capital. And I think that's essentially what an entrepreneur is. They're deploying capital in a way that's going to have a significant return on that investment, whatever they're deploying capital. And I think those are the three reasons. And it's not common. Again, I'm inspired by some of those folks you mentioned earlier, and they inspire me. And that's one of the reasons I'm doing it. But I do think when you've worked a job for, let's say, 15 years and you've been successful at that job, that's really, there's an opportunity cost to go be an entrepreneur now. You know, you could go back and just make your 250K pretty easily, right? Yeah. So I think that's a challenge. Yeah. But when you think long-term rewards, right, it pales in comparison to what you can do if you're building your own thing. It's just, it's a no-brainer for me.
Yeah. Anthony, I have a question I ask all my guests.
Yeah.
Suppose I have a time machine that allows me to send a postcard to the 5-year younger Anthony Franklin. And you can write something on that postcard, sending a warning to the younger self, so your younger self, what to do, what not to do, what to avoid. What would you write on that postcard?
It would be a long postcard, number one. So I think maybe
You have to write very small.
Yeah, very small, right? Yeah, maybe bullet points. But anyway, I think number one is take calculated risks on a regular basis. I think what we do a lot of times, and this is something in my career and why I'm getting into it later. I'm almost 40 years old, right? And turning entrepreneur. It's not a move that a lot of people make. But the truth is, I wish I would have been spending that time when it wasn't as big of a risk to do that, right? So I think taking calculated risk is super important. In your career, maybe you don't want to be an entrepreneur. That's fine. Take calculated risk. Take a job that's going to give you a skill set that nobody else has. I could tell you, bottom line, when I'm talking to owners or interviewing for a job, nobody has been a former pastor-turned-salesperson. Like, that's super weird. And they're like, tell me about that, right? Yeah. That's the stuff that helps you grow. I think the second thing is find a mentor, right? And it doesn't need to be this like official, like, will you be my mentor type thing. I probably never asked somebody that. But I've showed a lot of admiration, taken people out to lunch and said, hey, I admire what you've done and I want to learn. And here I have some questions. I'd like to get some time with you to ask these specific questions. I'll put them right here in this message. But can we get some lunch, right? And have that on a regular basis. Those are the relationships that I value so much these days, right?
Speaking of having lunch, if a listener is interested in selling their company, or at least discussing it, how do they reach you?
Yeah, you can reach me. I'm on LinkedIn, Anthony Franklin.
We'll link you on our website. Go to the episode. There's a transcript. We'll add a link.
Yeah.
LinkedIn is the way to reach out.
You could also email me at spearheadcapitalllc@gmail.com.
Fantastic. Anthony, thank you so much. All right, everyone. That brings us to the end of this episode of Speak Revenue. I want to thank our guest, Anthony Franklin, for joining us today and sharing his knowledge. It was the first time that I had a pastor on the show, so it was a great experience. I hope we'll have more men of God here. A huge shout out to our listeners. Your support means the world to us. Remember to check our website at speakrevenue.com for a full transcript and the contact to Anthony. If you enjoyed the show, please leave us a great review at Apple Podcasts, Spotify, Google Podcasts, or wherever you go for your listening needs. It really helps to get the word out. Also follow us on LinkedIn, on Insta, on YouTube, and wherever you can find us. We'll be back soon with another great guest. Until then, stay curious, stay healthy, and talk to you soon. Goodbye.